All right, I think we're rolling. Mic's working. Mic check, and we're good here. Hey guys, welcome back. This is Hala Pablo. Thanks for tuning in. I want to look at Ethereum. Real brief, real briefly. I want to do some volume spread analysis and some fractal range analysis as well on Ethereum, so we can kind of get an idea of what it's doing, where it's going. And if we get an idea on that, then the so many coins, so many tokens that run on the Ethereum blockchain, that is the ERC20 tokens, we can reasonably predict their trajectories as well. And if you're interested in swing trading some of them, you could really make some profit, primarily in shorting. Now, I don't short. I've talked about this before. I don't short. I live in the United States, and you really can't short crypto without a VPN. I don't really get into any of that. And on my previous video, if you watched it, I talk about being in a bear market. Right now, primarily, smart money is accumulating or absorbing, and that's what I do. To the best of my ability, I try to mirror what smart money does, and that's really the essence of Wyckoff. So, so if you're inclined to short, then by all means, this should be very, very fruitful for you. This material that I'm about to share with you. Now, if you get anything out of these videos, if you benefit at all from this sort of technical analysis, I'd appreciate a like, subscription. Uh, uh, I I have no need of sponsors. I don't shill. This is all the charts that I share and all the coins that I talk about are assets, crypto tokens that I invest my own money in. So you're welcome to do what I do, piggyback some of my trades, some of my TA, as long as you understand that you do it at your own risk. I'm not a financial advisor, and nothing that I say in any of my videos is to be construed as financial advice. So, all right, we got that out of the way. Let's get into it now, guys. I want you to see this. This is Ethereum. This is Ethereum. Now, the top chart is a 2-day. These are 2-day candles, 48-hour candles, and on the bottom, this is a 30-minute chart. These are 30-minute candles. So it means 96 of these candles equals one of these candles. And we're at the exact same position in price action at the current where it sits. Ethereum sits at 2,438, give or take, dollars. That's on the 2-day. And then the same price is here, evident on the 30-minute. How is this even possible? This is fractal range analysis, guys. If you go into a position, you go forensically from the macro into the micro, you will begin to see the same patterns playing themselves out over and over and over again. It's like the molecules and the atoms that make up our bodies. Uh, you see, like someone who's very attractive, for example, they're only attractive because of the unique way that the configuration of the atoms and molecules in there that make up the symmetry of their eyes or nose or lips or whatever like that. So if you go in deep enough, you'll begin to see the building blocks of what causes us to look the way we look. And if you do the same thing with the fractal format, if you go in deep enough, you'll begin to see little patterns that on the macro mirror the micro. So basically, the macro is just a projection of what's going on in the micro. We can apply that to price action because everything, Elliott wave, Wyckoff, it's all fractal. The markets are all fractal, guys. You see these patterns. This is why I preach pattern recognition in trading. And you don't really hear a lot of traders talking about pattern recognition. Everyone's talking about fucking moving averages and RSIs and oscillators and this and that. And really, price action is patterned. It comes in patterns that repeat themselves over and over and over again. Some patterns have a propensity to go one way and others go another way. It's not always cookie cutter. It's like, symmetrical triangles can go up or down. You know that. So nothing is 100%, and that's where volume comes in, because volume can give us that extra boost, and it could buttress or bolster our conviction on whether or not a say, for example, a wedge is going to go up or down. Like, take for example these tops. You see these tops. You got this top here on the 2-day. Now this is a macro top. It started marking up around well, probably right here in March of 2020, and it culminated up here in November of 2021, somewhere around. And you see that it's the top. This would kind of correspond to this here on the 30-minute. Now this happened. We can go all the way back to where this top began. Let's go like somewhere around here, January 8th. So it's just a few days ago, and it culminated up at D. This was on the 12th. So this is just a few days, but you see the striking similarity. You see the crowns on the top. It's like, some people call this like a triple top or double top. Really what they are, they're rising wedges. Again, you get the pattern. What are tops? What are rising wedges? They're crooked tops. The peaks, the B and the D, are they're the buying climaxes, basically. That's the buying climax of these. I mean, if you wanted to get into like the technical Wyckoff, this would be the buying climax, and this would be the, I don't know, like the UT, and this would be the upthrust after distribution. Same thing here. This would be the buying climax. This would be the upthrust, and this would be the upthrust after distribution. And so, but the point is that you see them over and over and over again. And if you see them on the micro, which play out a heck of a lot faster than on the macro, then we can get a pretty darn good idea of the general trajectory of what we can anticipate for the longer swings that we do, the position trades and the swings. Whereas if you're wanting to scalp or day trade, then you would obviously go down to a lower time frame where you could use the same principle, just plays out a lot faster, and the Fibonacci's also jibe in the same way. You just don't the gains aren't as luscious as they are in the macro. Now, I prefer to swing trade. My group is a swing trade group. My signals are swing trade signals, so I'm more inclined to that, and I use this. I think this is better suited for that. But I just wanted to show you sort of like what fractal range analysis is and how I employ it. So you see here we had this top. This top would correspond to this top here, and we had a distribution, which it came down to the, I guess we can call this the selling climax. That would be this area here. Let me get a little pen so I can draw this out for you. Here, this would be the selling climax. That would correspond to this area, and then we came up, we formed this Elliott wave, which hit the micro trend resistance on the 30-minute, and this would be the macro trend resistance on the 2-day. Then we came down, we had the A here on the this would be the 30-minute, and then we had the B. Now notice the B in the macro also didn't come up very high. Same here, we bounced off of the 0.5 Fibonacci. This is mid-range, this yellow line that goes through the middle of this regression trend channel here. So B didn't come quite up as far, and then C came back down to touch the this would be the trend support line, and then D came all the way up to macro trend resistance, like here. Now, since this range here is moving a lot faster than this range, we still haven't distributed from D on the 2-day, but we see on the 30-minute we've distributed, and we've come straight through the 0.5 Fibonacci line, and we hit this would be the micro trend resistance. Remember, this is the macro, this is the micro, and then we experienced a large supply spike where we promptly got rejected off the anchored VWAP. Now, I anchored the VWAP on the micro to the selling climax here. The selling climax, that would be here on the macro, same area. And here you see that we've retraced down from this rejection, and now we're going into the fib retracements. Now I have the fib, the 4 fibs that I use. I use the 1, I use the 1.272, the 1.618, and the 2. And I expect this to go down perhaps to the golden fib ratio, to the 1.618. Now, what does that mean for the macro? Now we're looking at this, we're looking at Ethereum long term to see, like, are we gonna dump here and maybe come back down to the 0.5 fib, which would be the Ethereum at $2,140. It is possible now. It is possible because we're having wholesale markdown out of this trend on the 30-minute. So we can reasonably expect, if this continues to mark down and we reach the 1.618, then that might signal a retracement here back to the 0.5 fib. And that could culminate in the $2,140 Ethereum. And then depending on what it does at midpoint, we can expect it to retrace further and have another touchdown on E. And in fact, in essence, do what it did here on the micro. What does that mean? That means that this is another top. That means that this is a redistribution, or what I contended is it is a counter trend, a macro counter trend, just like we're seeing with Bitcoin. Bitcoin is sitting in an overbought position on a macro expanding rising wedge. Ethereum also has it's not really a wedge, it's more, it has, the support and resistance is more parallel on it, but it is also sitting at an overbought area on the top of the macro trading, what would this be? This would be the macro trend resistance line, and this could mark down, back down to E, just like it did here. So anyway, that's the bias that I'm seeing. That's what I'm looking at. And I'm not making a move yet. I'm waiting to see what the price action does on the 30-minute. If we come down to the 1.618, I think that's going to be conclusive, and then we can definitely expect this to come down as well. And then you could set your shorts if that's what you're inclined to do, is short. All right, this is 12 minutes long, man, and I'm winded. I apologize, guys. I'm trying to get my thoughts together, and I thought the coffee would help, but what the hell? This is all I do. I just trade all day and analyze charts, because that's what I can do. And so I'm going to look at a few more charts, and I'll let you know if I see anything. But until then, I hope you benefited off this. You got got through some of my rambling, and some of this makes sense. Guys, this is a really cool system. It's very, very accurate. It's very interesting. And I don't really see anyone else doing this stuff. So hopefully you learned something here, and this inspires you to go and start doing your own fractal range analysis on the coins and tokens that you like to trade. And let me know in the comments what you find out in your own investigating. So, all right, guys. Well, I'm gonna go talk to my Discord group. I'm gonna post some charts, and we'll talk to you guys later. Have a great day. Happy trading. Stay safe. I'm out of here. That's enough out of me. Bye bye. Bye bye.